On Thursday, digital asset infrastructure company BitGo rang the opening bell and started trading on the stock exchange under the ticker symbol BTGO. The excitement was palpable. Shares were up by about 35% at one point in the session, and it did end the trading day higher by 2.7%. Well, after yesterday's open, the company's chief revenue officer, Chen Feng, told me, quote, "The IPO is just the beginning," end quote. "We got a lot more to do to bring the rest of traditional finance into this space," he said. Well, joining me now with more is Ryan Rasmussen, Director and Head of Research for Bitwise Asset Management. Ryan, it's great to have you on the show this morning. BitGo in focus this week as we kick off 2026. What do our viewers need to know about BitGo from your viewpoint?
Well, it's great to be here with you. Really excited about BitGo being one of the first major crypto IPOs of 2026. And our view and what we've really seen from investors' reaction to the IPO that you mentioned is that BitGo is an incredible company. They have a massive custody business in the digital asset space. They offer all kinds of different institutional services and are playing a major role in tokenization, which you just spoke at length about, and the NYSE is also focusing on. I mean, they offer stablecoin as a service solutions as well, which are a market that's forecasted to go from 300 billion to 3 trillion over the next 5 years. So BitGo fundamentally is a great business. They're very well positioned as crypto moves from this retail driven era to an institutional driven era. And I think we'll see a lot more companies in the crypto space going public in 2026, even more than went public last year. And we're really excited about investors being able to get exposure to these fantastic companies.
Now, I see that your firm believes that there's never been a better time to invest in cryptocurrency. Why is that?
Yeah, it's a great question. Again, our view on a risk-adjusted basis, there's never been a better time to invest in crypto. The reason for that is that the biggest risks of investing in crypto, those risks that plagued crypto for the first 15 years of its existence, just are no longer a major factor in the space. Those risks are things like lack of institutional structure and a foundation that is regulated. We now have things like ETFs and public crypto companies like BitGo. Stablecoins and tokenization are becoming part of Wall Street's vocabulary. BlackRock and Larry Fink are talking about tokenizing every asset in the world. And I think importantly, the SEC, the CFTC, the White House, and Congress are pro-crypto. So all of those risks around regulatory risk and infrastructure risk and institutional risk just no longer exist in the crypto market to the extent they did before, yet the outlook for crypto has never been stronger. So from a risk-adjusted basis, it's looking very attractive to us at Bitwise, and that's certainly what we're hearing from our clients as well.
We also understand that you eventually see the price of Bitcoin reaching $1 million a token. That would be astronomical growth. When do we get there?
It's a good question. We think we get there in the next 5 to 10 years. Now that'd be about, we're trading at 100,000 today. $1 million is upside from there. As you mentioned, it's pretty significant upside. But here's what I would tell you is that institutional investors are coming into the market in size, and we no longer have this boom and bust cycle in crypto. And you saw that last year with a pretty choppy year sideways. Historically, crypto's moved higher significantly and then fallen in a big crash and boom and bust and boom and bust. And we just don't believe that's happening anymore. And institutions are coming in to buy the ETFs. Corporations are buying Bitcoin. Central banks are buying Bitcoin. And because you have this structural demand that is one time and long-term in nature, we believe that will drive the price higher over the next 5 to 10 years. So instead of this boom and bust cycle, we think we're in this grind higher as Bitcoin moves into the mainstream. So the structural demand versus Bitcoin's fixed supply is what we believe will drive Bitcoin higher, driven by institutional adoption.
I want to focus on what you said there, the move into the mainstream, because you have said that crypto's 4-year cycle is dead. Walk us through why and how this cycle is being restructured.
The reason that we believe the 4-year cycle is dead is because in the past, you had all of this euphoria entering a retail-driven market, which led to a lot of FOMO, and often crypto would get out over its skis. And the market underlying infrastructure wasn't prepared to handle that kind of massive growth and that kind of attention. And so then you had this massive fallout from things like centralized exchanges going bust, or famously the implosion of FTX leading to SBF going to jail. And the thing is, now that crypto's moved into this institutional and regulated phase with things like the Genius Act and other pro-crypto regulators out there like the SEC and CFTC fully supporting crypto, we no longer have the risks of those types of things happening, because you have companies like BitGo, like Coinbase, and like traditional companies playing a role in the space. Those companies have operated for years without these types of failures. And so you no longer have this retail euphoria blowing up in this catastrophic manner. Instead, what you have is long-term oriented investors like financial advisors and family offices and high net worth individuals who are coming into the market, and they're starting with a 1% allocation, then they're laddering that up over time. We've seen that over the past few years with our clients, and I think more and more institutions are coming into the market through major wirehouses like Merrill Lynch and Wells Fargo, who are now finally getting approval to Bitcoin ETFs and to be able to invest in those on behalf of clients. So you have this infrastructure that's finally in a place that can handle the type of attention that crypto is set to get. You have demand coming from institutions that are long-term oriented rather than retail investors that are driven by cycles and hype. And you have a regulatory layer that is pro-crypto. So you no longer have this threat of regulation by enforcement if you're operating in the US and trying to do the right thing, which means that the best companies can rise to the top. We're seeing that with companies like BitGo and Coinbase, and that's a far improvement to where we were in the last 4 years, the 4 years before that, and the 4 years before that.
All right, Ryan Rasmussen, Director and Head of Research for Bitwise Asset Management. Ryan, thanks so much for joining us from the West Coast this morning.